CEO of PI Industries joins us on the phone line this morning to talk about that. Mr. Singhal, good morning. The revenue growth once again has been muted this quarter. How much of this is to do with the deficient monsoons, and what is the outlook for the second half of the year?
Yeah, hi, morning. I think if you look at the agri-domestic business, there has been a deficit due to the monsoon, which has been impacting the country all across, and the swing and the pest pattern, which has been there in the country. The deficit is basically driven by our CSM business because there has been a shift in the revenue, which is going to take place in the next half of the year because of the order book position. So going forward, we see that we will continue to maintain and achieve numbers in the next half of the year.
Well, actually, the sowing was not disrupted because the rains came in on time, and June was a fairly good month of rains.
Acreage is low, at least.
So, I mean, exactly what hurt you? Is it locally, geographical, specific? Just what hurt demand so much?
Well, the demand is definitely, as you would see, the rains have not been. There has not been timely rains, and the sowing has been impacted in certain crops like cotton. And you also would see that that some of the other areas have not had the MSPs are down, and the farmers' capability to take pest infestation has also been low.
MSP lower is also something that hurts you.
Yes, but if you would still see that we still did a healthy growth in H1. If you look at the overall growth in the agri business, our growth in the half yearly is about 13%.
Okay. So in the CSM business, which is your custom synthesis manufacturing business, what's the current order book like, and what is the visibility for the second half of the year?
We continue to maintain our top line, which we have indicated as earlier. Our order book position is still at the healthy position of $650 to $700 million.
Okay.
Okay. What will be the margin performance in that case?
No, margins will continue to be maintained as indicated earlier.
What was the indication? I mean, you've done 19% this quarter. Oops.
Okay. Well, that was a hurried Mr. Singhal telling us that, okay, he will continue to maintain the margins as guided earlier, but it was a disappointing set of numbers, more so because the revenues have grown in just low single digits, just 4.7% for the company this time around. But we'll talk about more numbers now. Our research team is standing by to give us